Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Yeah, happy Friday, everybody. Another fantastic episode of Travillian Next. Really excited about this combo we have today. I'm privileged to be joined by Adam Watts, and he's the president COO at Save, really exciting fintech that's growing like crazy right now. And also Chris Rigoni from Webster Bank. I want to make sure I get your title right, Chris. You're the senior managing director, head of enterprise payments and BaaS Sales and Implementation at Webster. So just wanted to, that was a mouthful. But no, thank you both for joining me. And the reason I'm excited about this episode in particular is, we work with a lot of BaaS banks, and we've worked with, fintechs who partner with those BaaS banks. Our audience and me personally really want to know what makes a successful relationship between the BaaS bank and the fintech. Coming up on, Valentine's Day next week. Whatever you want to say about a relationship, communication, what the key is. Really wanted to get a view of that. But first, I'll start off by Adam. Can you give me a little idea? I've seen Save on LinkedIn. I'm getting emails. Can you give me kind of an overview of your company? It seems like a really cool, a lot of cool things happening there.
So, President COO over at Save. At a very high level, what we do is we integrate market returns into traditional bank products in order to be able to enhance the yield that they would get versus sort of a traditional plain vanilla type bank product. So we work on the savings side and the card side. On the savings side, we replace the interest that a savings account would get with market returns. On the card side, we replace the rewards or the points that a card would get with market returns. In either case, whenever we integrate market returns into that bank product category, what you're going to see is that because of this additional yield, it's going to outperform the market leaders within that space by about 2 to 3 times. So last September, we launched with Webster the Market Savings Program. And that instead of getting interest, you're getting market returns with a savings account. And the net effect of that is that we're advertising right now an average expected yield on those accounts of around 8.3%. You compare that with the best savings accounts that are in the United States right now, the highest yielding, they're roughly at that 4.2, 4.3% range. So we're outperforming those by about 2%. The key is that that's pre-tax. Most, in fact, all savings accounts in the United States the interest on them is taxed as ordinary income. Because we're providing investments, those investments are actually taxed as long-term capital gains. And so when you look at it after tax, the relative advantage actually goes up to about 4 times. So it's a huge advantage.
And this time with inflation and everybody's looking for yields. I know I have the website up right now. I'm about to sign up.
Good.
I'm looking. I know you.
In classic fintech fashion, we will watch you, and we will watch that account being open.
That's great, and you're kind of getting the best of both worlds. So you're getting a higher return, but also the risk is mitigated, right?
Yeah, you do. You get the best. So for our customers, the key is that we never put the customer's deposit at risk. We never touch that cash. They still get that safety and security associated with an FDIC insured bank deposit, while at the same time, they're getting this enhanced yield associated with the market return component. And so it's a very differentiated product for the banks themselves. And an important conversation you always have to have within the fintech community is not just achieving differentiation, but is this a sustainable advantage that you're going to be able to achieve over time? And we think that the value proposition is such that it's going to allow you to be able to achieve that.
No, that's fantastic. And Chris, great to get to know you, over the past year or so. Really love working, love talking with people from Webster, and there's a lot of really exciting things happening there. I know you were at Sterling before that, and then Webster purchased Sterling, and Sterling built, the BaaS program. Yeah, tell me a little bit about what's happening at Webster and your BaaS program, and partners, and exciting things happening over there.
Yeah, sure. So our BaaS program, I mean, it's been running for a little bit. We've been in the industry for a decent amount of time, a couple of years or so now, and growing. We've got Save is live with us. As Adam mentioned last September. We also have Row Business Banking and BrightFi and others. So it's been really a lot of fun, right? I mean, I think the great thing for me in this role with banking as a service is I get to work on the leading edge of these innovations that the fintechs are doing, and get to see the new and cool stuff that's coming in the market, right? I get to see, the different spins on products that banks, typically offer, like Save is doing. I think we've had a great relationship with Save. We've had a really good time kind of expanding, and it's been beneficial for the bank, right? Both from a deposit standpoint, fee revenue, and all of those things that banks typically look for anyway. So just generally, I think BaaS has been really good. From a product standpoint, I mean, we're all about relationship. We want it to be a true partnership at Webster, and we try our best to make sure it is that, right? We want to communicate very effectively, and we want to partner to make the fintech better, not only in risk and compliance and other areas, but also generally for their product and expansion, right? So if there's areas that they can expand and move into that we think would be beneficial, we want to suggest those. We want to use the data that we see and experience that we have in financial services to kind of offer that, and not only deposits but payments and other areas. So a lot of great stuff happening. And on the flip side of that too, we get a benefit of, if there's something interesting out there, we can white label it, right? So we can actually offer it to our customers internally, which is also nice. So from a banking perspective, I think, the BaaS space has multiple different uses and multiple different benefits to a bank, and we're experiencing all those for sure.
That's great. Yeah, and going back to you, Adam, and this is kind of going back to maybe the Valentine's Day theme. How did you guys meet? how when you were vetting out potential partners, what stuck out about Chris and his team and Webster that had, your firm, so much invested in this? What separated other potential BaaS partners? Because this is something that I'm very interested in too. Is it like a courtship in the beginning? Do you meet with a bunch of different BaaS partners and you figure out who's the best relationship, communication? How does that work kind of at the beginning of that partnership?
It works differently based off of where you are in your own sort of experience level. Kind of, I mean, we could go all in on this relationship theme in Valentine's. If it's your first relationship, then you're going to behave a little bit more differently than it's going to be if it's your second or third or et cetera. And in our case, we have integrated at this stage with about 3 different BaaS partnerships throughout the history of this company, and have also integrated sort of operationally with other banks during that period of time. Initially, when you are first getting started as a fintech, where your focus typically is on the pricing side, because a lot of these fintech models are very low margin in general anyway, and so they're very sensitive to the pricing side whenever they're looking at BaaS partnerships. As we have grown as a company and been in the marketplace and learned, while I don't want to discount the importance of pricing, I would say that's certainly that's of lesser importance to us. What we do is we we would look at first and foremost sort of the operational integrity of the bank partner. That is really kind of critical, I think, whenever you are considering a BaaS partnership. Um, I like to say that I'm the son of a NASA engineer, and so I kind of grew up in that whole ethos of mission critical processes. And in my former firm and in this firm, we've done a lot to really try to espouse that philosophy of building layer upon layer of redundancies into the operations in order to be able to make certain that the mission is achieved. It's very important that when you're dealing with finance and people's money, that you're dealing with a BaaS partner that really kind of maintains that same approach in terms of how they do things. So the BaaS partnership itself can't be viewed as a service provider, just a transactional level. Instead, it needs to be something that you're looking at somebody that you're going to be working with on a day in, day out type of a basis. But back to your question in terms of sort of how things played out, and that what I think is probably the most important thing in any of these types of BaaS relationships is a commitment to the business model that the fintech is actually trying to achieve. And so we started working dialogues with Webster actually prior to the pandemic. Obviously the pandemic sort of disrupted a whole bunch of type of things and from an innovation perspective, but we had numerous conversations, ongoing dialogues with their senior management in terms of the business model, in terms of the differentiation, how we were attempting to be able to achieve, this enhanced return, and they bought into it and they became committed to it. And so it's that commitment to the business model and the relationship that I think is ultimately the key, because it's exactly what Chris said earlier. If there's a commitment on the part of the BaaS partner to the financial model, then they are not just a service provider, they're a partner in the business endeavor that's going to take place. And that flows through everything. It flows through the beginning, the pricing, the contract, the terms of how the deal is going to work. It flows through how you interact with that BaaS partner on a day in, day out basis from an operational perspective. And then, probably equally important is that we're talking about innovation here, and all innovation has sort of a diffusion of innovation curve where there are early adopters and later adopters. And those beginning stages of actually innovating require, a commitment from the senior management of both firms in order to be able to kind of incubate that concept as it starts to ramp up. And so, again, keeping with the Valentine's theme, it all comes down to commitment for sure.
Yeah, and going over to, no, thanks, Adam. That was great. And Chris, from the BaaS side, we have, like I said before, we have a lot of BaaS clients, and, potential fintechs come to them and see if they're a good fit. What are you looking for on the Webster side when you decide to partner with a Save or other fintechs? Because it's reputational risk. It's there's a lot of risk and compliance that goes into it. So you want to make sure, from the bank side, that the partnership and the firm you're working for, has controls in place, has great communication and leadership. What do you look for when you go into that relationship?
I think, the financial aspect obviously is important, right? I mean, we have to believe in the business case. We have to believe it's going to be successful. And I think a lot of that comes down to how the fintech explains what their business is, right? If you're really innovating on current products, or you have, something brand new that no one's ever seen, or, if that's your thought process, then you're going to have to be able to articulate that. You're going to have to be able to explain not only what it is that you're doing, but also why it's so innovative and why people are going to care, right? And you're going to have to convince, a bank that's going to be a sponsor bank that you're going to be successful in that endeavor, right? So if you've got, take Save, for example, it's not that it's an overly complex product, but it is more complex than just a savings account, right? And so we have to be able to articulate that internally to risk and compliance partners, and we have to be able to understand that enough to say, you know what, I think people are going to buy this. I think people are going to like this, and I think it's going to be successful, and we want to support you in doing that. So that's one piece. I think the other piece is commitment to their product and commitment to doing it correctly, right? And that doesn't mean that, you know, from a risk and compliance perspective, we can't check the same box in a different way, because I think that's important, and that's important conversations to have, and innovation doesn't happen without that. But at the same time, if the commitment is not there, both in getting help externally or hiring the correct people internally, and, you know, taking the time to build out the necessary blocking and tackling pieces, whether it's disclosures or policies and onboarding processes and all of these types of things, if that's not there, it's going to be tough, right? And I get everybody has to start somewhere, but for us specifically, it definitely helps a whole lot if a fintech is a little more mature in that level or has the help to kind of usher them along. The final thing is we look at the founders and we look at, you know, the people that we're working with. Are these people we think are going to be reliable? Are these people that are going to communicate? Do they communicate well already, right? That goes back to the first point of communicating the business case. Is this a partner we're going to be able to work with, you know, throughout ups and downs, right? Because inevitably, you know, everything can't be all rainbows and butterflies, right? We're going to have some tough times. We have to have conversations and walk through things and resolve issues. Are these people that are going to provide solutions and bring something to the table, or are they going to kind of sit back and wait for us to do, you know, whatever it is we need to do, or offer solutions, you know, to them? And I think the true partnership there is really what we're looking for. And I think it goes again back to what Adam said. It's all about the commitment. It's all about the commitment to the BaaS sponsor, that we have a skin in the game, they have skin in the game. Let's partner to get this thing to work and to be successful.
Well, one thing, if I can sort of piggyback on something that Chris just said, and then, you know, maybe share the love a little bit, because Webster is a complete all-star on this particular level, is that another sort of learnings that we have had from having been in the space for a while is that if you're looking at a BaaS partner, we want BaaS partners that really place a priority on risk and compliance. Because it's strange. It's not the first part of the conversation that you're going to have with a BaaS partner when you're talking about things. We've already kind of listed all of those types of things. You start off with the business model, you start off with the operational integrity, you start off with the teams and all of that. But strangely, the commitment to risk and compliance has a variety of sort of follow-on effects. It's almost akin to how John Wooden used to go. The very first thing that he would do with the basketball players over at UCLA was to teach them how to put their socks and shoes on. And in that same type of a vein, it sets the tone for the relationship. It sets the tone of paying attention to details. And then it kind of, everything else starts to sort of flow through off of that. And then apart from the individual BaaS fintech relationship, I think that's pretty important for the entire BaaS ecosystem as a whole. Because as BaaS frameworks and partnerships grow and become a greater part of the banking system as a whole, obviously that's going to gain greater and greater attention from the regulatory oversight that exists out there. And I think that that's healthy, but it's also important for the participants in the system to actually be proactive in actually setting very high standards for all the participants in the ecosystem in order for BaaS in general to progress. So this is an area, by the way, that Webster is unmatched. They check all the boxes. They're very good. We, you know, as I mentioned earlier, the leadership at Save, we all came from banking and the investment space. So we're very comfortable with sort of the regulatory requirements that exist within this space. But Webster both ups our game and we try to up their game too. And so we think that that's really important from a relationship perspective.
That was a great example there, permeation throughout the organization for risk and compliance.
It's a hallmark. It really
is.
It's a hallmark.
It is. I
You know
call
how
it.
if you show up to meetings on
Yeah,
time, that kind of indicates a lot about how
yeah,
the rest is going to work out.
yeah.
The same thing
Love
works with risk compliance.
love the John Wooden reference too, because it was all kind of starting with that process, and all great coaches, I think, get that culture and process in place, from being on time to, like you said, put your shoes on the right way, and then everything takes care of itself. You don't even look for the final score because you'll get there. But I always call it, in being Super Bowl weekend too, I always call it, and Chris has heard me say this, the offensive line, risk and compliance. You invest in that offensive line because everything else kind of flows off of that.
It
And
does.
Chris, being a big Alabama fan, he knows, got to get those big guys up front, who are working together as a team. Or I don't care if you have Patrick Mahomes back there, it's, you're not going to win. Yeah, no, this is great, fellas. Any parting thoughts? Like, I'd love to get kind of Adam for founders, any kind of words of wisdom, and then I'll go to Chris for, the BaaS side. But I'll start with you, Adam. Kind of any words of wisdom for founders out there when choosing a BaaS bank. I think you hit on a lot of great points, but anything else you wanted to kind of just end with?
This may not be the deepest drop of wisdom, but I would, before you even contemplate entering into a BaaS partnership, do your homework on your business model. Do your homework on the validity of your business idea and everything. Yeah. As I said, we consider ourselves a little more fin than tech, and your product probably needs to be one that would be successful without the tech to a certain degree. That might be an unfair characterization, but it can't be entirely tech dependent. It needs to be a model that's differentiated, that has a sustainable competitive advantage. That's going to make a huge difference in terms of the dialogues that you have with the different BaaS partnerships that are available there, and a lot is going to flow from there. So,
no, that's great, Adam. And going over to you, Chris, kind of emerging BaaS banks, new BaaS banks coming into the market. Any kind of advice, foundational advice for them?
Yeah, I would say, make sure that you have your infrastructure and risk and compliance in place. BaaS isn't something you try, right? It's something you either do or you don't. And it's going to take investment to do it correctly, whether that's investment in a partner and an intermediary, or whether that's investment internally for infrastructure to be able to support it. But even if you go through an intermediary and the technical infrastructure is outsourced, by and large, you still have to have those, folks internally that are on board and are ready and waiting to support, the fintechs and also the risk and compliance pieces. And from a risk and compliance perspective, the thing that I would say, and kind of add on to what we've already said on that, is that, so far at least, there's not anything new, right? I mean, all of these regulatory bodies aren't coming out there and offering anything new. They're basically looking at what's in the market and saying, hey, this is an existing guidance that needs to be followed, right? And so we're not recreating the wheel here. It's still financial models. It's still, the same, revenue streams that have always been. And so focus on that. As far as the fintech partnerships are concerned, I would give a little piece of advice to any fintech founder, somebody looking to partner with a BaaS bank. I would agree with Adam, do research on your business model, but also make sure you can articulate it well. Make sure you've practiced that presentation, and the presentation that you take to the investors is not the same one that you're going to take to the BaaS bank, right?
Yep.
I mean, that's you're not trying to win over investment. I mean, that may be a side, a side benefit to what you're doing, because some of the banks do invest. But by and large, if you're looking for a BaaS sponsor, you need to be able to articulate what you're offering, why it's differentiated, how it's going to be successful, what your marketing plan is, and also what services that you need from them, right? And what your projections are on how you're going to perform. So I think it's an exciting space. I think, we see new banks, right and left they're thinking about getting into it. I think the latest data I saw is about 85% of banks say they're either thinking about or are currently working on getting into the BaaS space. So I think it's going to explode and still in the process of doing that. So I think there's more exciting times to come for sure.
No, that's great. So, no, thank you both. This has been incredibly informative. Love having both perspectives on there. Yeah, and the Valentine's Day theme, communication, commitment, ups and downs. I think we all.
We love you, Chris.
Yeah. Yeah. I wish I could. Maybe I'll put a little. We can add a graphic with like a little rose
Art.
above Chris's head.
We do. The whole Webster team is awesome. We couldn't be happier. No doubt about it.
That's
Awesome.
fantastic.
We appreciate that. We're happy with
Thank you.
Save. Moving right along.
Yeah. Well, thank you, Chris. Thank you, Adam. Enjoy the game on Sunday and enjoy Valentine's Day. And yeah, look forward to seeing where Save goes next if those numbers keep going up. But I'm about to sign up and start getting some yields. I need some. But thank you both.
Awesome.
Thank you.